Good morning and welcome to IG's early morning call on IG Live on Monday, the 13th of March, 2023. Now, coming up in today's program, we've got tons of news for you. Some respite for the traders after the US intervenes in the SVB collapse. Hong Kong's Hang Seng and Chinese stocks head higher after that, and European stocks look likely to follow suit. The dollar sinks, the US intervening on the SVB collapse sparks hopes that the Fed will take a less aggressive monetary stance. Now let's take a look at the VIX for you, because this is the otherwise known as the fear index. Now, it had already shot up Friday to its highest level since October. It's now trading at around 23.33, leveling off there. However, there's still a lot of time before Wall Street and indeed Europe opens. With 30 minutes to go until the European market open, let's take a look at how they are looking for you. This is the CAC 40, the France 40 on the IG platform, looking like it's ticking slightly higher there. Indeed, I've just checked my charts as well. A lot of these indices, let's take a look at the DAX. They look like they might open slightly higher after the overnight events from the US. And here's a look at the FTSE, a similar picture there as well. It's going to be a really exciting open, given what we've heard out of SVB. I'll get you the details on that in a moment. Now, US markets closed in the red on Friday as markets got more and more worried by the Silicon Valley collapse. Now, Wall Street closed lower, as I mentioned. Have a look here, down around 1% and 1.5% respectively. The Nasdaq lost 1.7% thereabouts. Now, to avoid further losses, as I mentioned earlier, these are the details. We did hear of a series of measures that was announced by the US administration ahead of the trading session in Asia. This gave a bit of a lift to the markets. We'll come back to that in a few minutes. This all also meant that the tech-heavy Hong Kong's Hang Seng led gains this morning. In Japan, the Nikkei initially reacted positively too, but the rise of the safe haven yen meant that mechanically this translated into a loss on the Japanese index. These measures also boosted the US markets. Now, on the IG 24-hour markets, let's have a look at how Wall Street is looking for you. That's the image at the moment. As I said, we are quite a few hours yet from the open, but I can tell you that futures are slowly, ever so slightly ticking higher. Remember as well, the US clock has changed with the European ones. For the next 2 weeks, the US will open, or rather Wall Street will start trading at 1:30 UK time. Back to our top story. So, what are these measures? All SVB depositors will have access to all of their money. On Friday alone, depositors tried to withdraw a whopping $42 billion. Now, this is access to the money today. Additional support will be provided to the banking system. US regulators guaranteeing at the moment that access to emergency funds will be made easier to banks. This was backed up by the Fed, which has said it would facilitate borrowing. And to show just how seriously the US authorities are taking this issue, US President Joe Biden made a point to reassure the market himself. The American people and American businesses can have confidence that their bank deposits will be there when they need them, he said, adding, firmly committed to holding those responsible for this mess fully accountable, and to continuing efforts to strengthen oversight and regulation of larger banks so that they are not in this position again. Those are the words of Biden there. And to avoid the spread of this problem to other financial institutions, to avoid contagion, regulators took the decision to close another bank, Signature Bank, which on Friday alone lost 22% of its already dwindling value. Like SVB, Signature Bank was closely linked to the tech sector. Almost a quarter of the bank's deposits alone came from the crypto sector. So how do all these measures translate onto the market now? We've already seen the boost it gave, or rather early lift to equities. The dollar weakened slightly. Let me show you the dollar here, dollar basket rather. Weakened slightly by Friday's non-farm payrolls, which wasn't really a bad figure, to be fair. Lost more ground, the dollar basket hitting a near 1 month low. Let me widen out the chart there for you. We're approaching that 10,300 level. As you can see, a narrow range there between 10,500 to 10,300. And we look like we are heading down towards the bottom end of that range. Certainly the momentum indicators are pointing downwards as well. The dollar fell as much as 1% against the yen as well. Let me show you the cross for that. As you can see there, a slightly similar trend line. The SVB collapse also means that markets are now speculating on the Fed not being as aggressive on rate hikes as initially. Now, some investors think that the rate hike later this month is no longer baked in. Before the SVB collapse, Fed funds futures implied a 50 basis point hike at the next FOMC meeting. Now, this scenario has been priced out. 14% now reckon that Jerome Powell will keep rates unchanged. Let's take a look at gold as well, because we've seen a bit of a reaction there. Here's spot gold up there for you. Now, thanks to the non-farm payrolls data, the precious metal had already recorded its best daily performance since November last year, as you can see here from this chart. However, measures announced by the US administration is sending gold one leg higher. It now trades at around 1,876, heading towards that 1,900 figure. Now, before the FOMC meeting next week, other central banks will be in the limelight in the coming days. On Wednesday, the BOJ will release its minutes, and on Thursday, the ECB will decide on its interest rates. Its main refinancing rate is expected to rise by 50 basis points to 3.5%. 50 basis points up also for its deposit facility and marginal lending rates to 3% and 3.75% respectively. Now, here in the UK, HSBC said it has acquired Silicon Valley Bank UK for £1. UK Chancellor Jeremy Hunt said the government and the Bank of England had facilitated a private sale of the UK arm of Silicon Valley Bank to HSBC. The move will protect deposits without taxpayer support. At least that's the plan. SVB customers will be able to access their deposits and banking services as normal from today. The Bank of England added that no other UK banks are materially affected, at least at the moment, and the wider UK banking system remains safe, sound, and well capitalised. Elsewhere on the UK equity market, very little news this morning. Watch out for Direct Line Insurance. The group had its full-year earnings statement and started it by saying that 2022 was a very tough year. Adjusted gross written premiums fell 3.2% to £2.9 billion. Operating profit tumbled 94% or thereabouts to £32 million. The group recording a loss before tax of £45 million. All this is due, and I quote, extremely bad weather, difficult investments, and a challenging market at home and motor markets. Let's take a quick look at oil for you before we go. Let's have a look at the chart here. And oil is really interesting because it too is reacting to that SVB move by the US. Brent, WTI, they're both moving because that weaker dollar, as expected, is giving support to oil. Stephen Innes, managing partner of SPI Asset Management, explains the competing drivers in the market as well. He says the US dollar should pull back as traders give up on a re-acceleration of Fed hikes. This in turn clears a path for more robust Chinese fundamentals to dominate commodity trading. On Friday, the Baker Hughes survey showed a drop in total rig count to 746 from 749 in the previous week. The number of oil rigs in operations fell by 2 to 590. And that's it for now. Before I let you go, let's have a last look at the equity markets to see how that is faring. Here's a quick look at the FTSE for you at around the 7741 figure and showing a small uptick there as we count down to the open. Join me on more breaking news on SVB throughout the day, and of course tune in for our Charting the Markets at 10:30. Until then, I'm Angeline Ong, and thanks for watching IGTV.